Hey, everybody, this is James Pelton. I hope you're having a good Monday afternoon. One of the most frequent questions I get that I am 100% unqualified to answer, so I never do, is how are you handling your taxes? What are you doing with your losses? What are you doing with your staking income? What are you doing with your mining income? And the answer is I have no idea most of the time. And so the proverb says even a fool when he keeps silent is considered wise. So that's usually how I handle those questions. So what Claire has done, which Claire is awesome. She's helping kind of with community building stuff and bringing just more value to, she's been doing giveaways and all sorts of stuff. Appreciate her very much. She found a crypto tax person. And so tax season is right around the corner. So we brought her on and hopefully she can bring some clarity to your questions. So if you're in the audience, need you to hit like right now. Please do that. And if you have crypto tax questions, and there's no such thing as stupid questions, okay? So just anything that you want to ask, please ask now. Don't wait and ask me later. I do not know, okay? I just want to emphasize that. I do not know. Please ask them now, and then they will be, Laura can answer them, and then they will be part of the video going forward to help other people as well. So, and if you're in the audience, go ahead and comment. What are you doing with your crypto taxes? Do you just try them yourself? Does your CPA kind of seem to know what he's doing? He or she should be gender inclusive there. Does he or she know what they're doing? AJ says he's here because the IRS is watching. I hope that's not the case. I hope the IRS just ignores me, leaves me alone. But yeah, let me know what you currently do for your crypto taxes. And yeah, hopefully this is helpful for everybody. So we're going to not introduce Claire because she's been on many times before. Claire's a part of my community. She helps me with everything. She's very organized. I need a Claire in my life, so I'm very thankful to have her. Laura, welcome to the channel. Could you start by just introducing yourself and give a little bit of your background and experience?
Yes, hi. Thanks for having me. So I'm Laura, but most people know me as the Crypto Tax Girl on Twitter. That's where I'm most popular. So I'm a CPA and I specialize solely in crypto taxes. um, I have had a crypto tax firm since the beginning of 2018. Basically, at the end of the 2017 bull run, I was doing my own crypto taxes and realized that it was complicated. And I was a CPA working at Ernst & Young before that. And I was like, okay, this is complicated. And I'm a CPA. Like, I can't imagine people that have no experience in this field trying to do their own crypto taxes. So I started my own crypto tax firm, and ever since then, we've been helping people in the crypto tax space and tweeting out free tax tips all year long. And yeah, we were one of the first ones on the scene, and we just still love doing it. So every year, I'm like, we'll see if we're in business next year, and we keep going. So I think this is my new career.
There you go. That's awesome. Well, it's definitely needed. I've talked to probably 8 or 9 CPAs and they all, when I tell them about what I'm doing in crypto wise, they just kind of look at their eyes get big and they just kind of look at me. They're like, we don't know. We don't know how to handle that and all these things. They try to guess and things like that. But no, I think there's a
Yeah.
need for crypto tax experts. So I'm
Yeah, it's hard.
glad.
I mean, I can understand, especially it's busy season right now. I'm super swamped with all my clients, just like any other accountant is. So during busy season is when you're trying to get returns at the door. And so when people come to you with cryptocurrency stuff, you don't have time to learn it. And I mean, even me, I'm in the weeds all day long on cryptocurrency stuff. And I mean, I'm involved in crypto personally. Everyone on my team is involved in crypto personally. All we do is crypto tax stuff, and there's still new stuff that pops up every day. So if you're not in it every day and all of your clients touch crypto and you only have a handful, I see why a lot of CPAs shy away from it or don't understand all the complexities with it, maybe just a general understanding of it. So yeah, a lot of CPAs I've seen, they'll say, okay, we'll do the rest of your return, but the crypto part, you need to either do yourself or have a crypto CPA do it and then bring us those numbers. So that's what we've been able to help a lot of our clients with, or we can also file the return, of course, since I'm a CPA.
Okay, very cool. Yeah, and I think that's what we need is we need CPAs who are doing the crypto stuff themselves. Because like my CPAs, none of them do any crypto, so they try to
Right.
look up the laws and everything, but they don't understand. Well, what is staking exactly? And I have to explain. Well, this is what staking is, and well, now what are you doing with your mining? And I have to talk through some of that. So
Yeah, I've
Really,
even learned, like, hiring people in my firm, like, I used to hire all these CPAs that I worked at Ernst& and Young with because 'cause I'm like, "Oh, they're super smart people," but then if they're not personally involved in crypto, just every day, like, I'm teaching them something new, so then if I started hiring people who maybe have, like, an accounting or a finance background, but just, like, are in the weeds on crypto themselves, they know the pulse on crypto, they've been, like, way better hires.
yeah, no, absolutely. That makes total sense. So yeah, welcome. We got some people coming in. Shadow Miner says, I use an online site to generate the paperwork and the wife files the taxes as usual. I think that's pretty standard as you use one of these like crypto tax generators that connects to your accounts and then tries to give you. I did that and I had like 1,600 transactions. And so my CPA, again, I just sent it to my CPA and he just kind of looked at me and is like, what are you doing to me? So I assume it. We'll talk maybe through some of the crypto different software tools that you can use. We'll go through some of that. So
Yeah.
what I want to do is if you have questions, ask those and I'll bring those up as they fit in. And Claire has some of her questions that she's going to ask, which I think are going to be kind of standard questions that apply to everyone. Maybe I'll kick us off because I have one for myself.
Go ahead, let's
Um,
go for it.
this is a very, very broad question, but how likely is it if you mess up your crypto taxes? You don't do it quite right. You don't do it quite the way the IRS was expecting. What do you think are the odds that you're going to end up in jail, or are the odds that you're going to get audited, or are there going to be severe penalties, or what's the consequences for not doing your crypto taxes quite right?
So I would say the consequences for not doing them quite right as of right now, compared to just not doing them at all, are like pretty low. So I have like 1,000 clients. I've been doing this for 5 years, and I've never seen anyone go to jail.
Phew.
And the amount of audits I've seen are like I could do on like one hand. Like it's very small. The amount that I've seen. I mean, granted, all my clients, like, I filed their crypto taxes, so I don't think the IRS is, pushing back on Crypto Tax Girl necessarily. But I have seen, some audits where the IRS just wants clarification, like if someone did like mining and they were depreciating some of their miners. Again, there is like there's tax guidance about how to do that, but I'm guessing the IRS agent that saw it didn't know what it was or they weren't familiar. So they pushed back on it and asked for a little more information. I've seen in most cases if someone's audited, they're just asking for more information. So they just say, "Hey, we saw you're requesting this big refund. Can you like provide documentation showing that this is like a legitimate loss?" And that's, like, really the extent of what I've seen, but I have had a lot of clients come to me when they've received tax notices just for not reporting at all. So, if you trade on, like, a US-based exchange, you might be subject to, like, having your information provided to the IRS. It's not like it would be as if you traded stocks yet, like, that's what they're hoping to do eventually, like, maybe in, they were hoping for this year, but they realized it was a logistical nightmare, so then they're like, "Well, maybe next year," and then we'll see if that happens. If not, it might be a few years from now. But they're hoping to have, like, 1099-Bs, something similar. It's called 1099, what was it? I don't know. It's like some new cryptocurrency tax form that they're trying to get running, and they want cryptocurrency exchanges to report your gains and losses. So one day there might be better reporting, but for now, they might only just have your name. And so if they have your name, they might look at your tax return and say, "Hey, I don't see any crypto activity on here, but Coinbase says that you've traded with them. So I'm assuming you're missing something. Please report your crypto activity on your tax return." And that's like the extent of it. Like they're not sending you an email saying you owe us $5,269 because they don't know that. Um, so the chance of going to jail, very small. The chance of getting audited, also kind of small. But not reporting it could have ramifications like long term, especially when the IRS gets these like new 1099s up and running. They could come back and audit you, for past years. And so even if you don't maybe get caught or, you don't have any notices this year, it could like potentially cause problems in future years once they do have better reporting and information. So,
Okay, that's super helpful. One thing that someone told me, yeah, there's only 19 tax court judges, and so like the actually going to trial, I've what I've heard is that it's very rare for that to actually
mm,
happen. It's usually, yeah, the IRS audits you, they want more information, they work out some kind of a deal with you. But that made me feel better because it can be, if you have no idea what you're doing, it can be kind of like, oh man, I feel like I'm not doing something right. So
Yeah, and I see like other CPA firms like, use kind of that scare tactic of like,
Mhm.
you could be fined up to $500,000. It's just like I've never seen it. It's not going to happen. Like it could, like yes, it is in the IRS code. Like you could potentially have these things. You could go to jail, but it's not going to happen. They're just going to send you a notice and say like, "Hey, send us some more info about your crypto."
okay, very good. Well, that makes me breathe a sigh of relief, and
Yeah.
I'll calm down a
You're
little bit.
doing your best. That's all you can really do so far.
Right. Well, and without the guidance, it's like, well, what else can we do? Is just, yeah.
I mean, we have some, but yeah, it's not perfect for sure.
Yeah. Okay. Well, hey, Claire, let's go ahead and start with your questions about rug pulls, and then I'll start bringing up some audience questions. We got a lot pouring in already.
Yeah, looks like it. So these questions are actually not mine. They're from James's community in the Discord. We submitted a form, and those are a bunch of people like asked some questions here. I was a little worried of starting it off with rug pulls, but James' first question is, "Am I going to jail?" So I'm okay
Yeah.
not being so
Absolutely.
negative. Um, you heard it here first.
This is what the people really want to know. It's fine.
Yeah. So James and I, like, I'm intimate. I know intimately some of the projects we're in, so I think that kind of also helps. But one of the big projects last year, we're calling it a rug pull, and people want to know how do we handle that. For example, the project was called Stable Fund. Right now, we're calling it a rug pull. They claim to trade with their crypto and provide a return, and then they disappeared. So
Oh
some
yeah.
people withdrew rewards from the project. So it looks like they were gaining income on their wallet from their capital, but some people just never ROI'd. So is that whole thing a write-off?
So okay, so basically you like sent them some portion, some investment, and you said trade this, and then they're like, okay, here's all your rewards. They would send you small amounts, but then you never got back your initial investment.
Yes.
Yeah. So what I would recommend, again, there's not specific guidance about something like this, right? So it's just like, what have I been doing for my clients? So what I would do is I would treat the transfer into stable fund, I think you said it's called, um, as a deposit. And then, so that's not a taxable event. So you're like withdrawing out of your wallet, depositing it into stable fund. And then every time you received some reward, treat that as a withdrawal out. So like let's say you had 10 ETH. I don't know if you did this in ETH or Bitcoin, whatever, but let's just say it was 10 ETH. And each time you pulled out one ETH, again, this is just hypothetical. So every time you pulled out one, your balance would go down one. So if you had 10 ETH in there originally, it's now down to 9, then 8, every time you pull out. And then it wouldn't be income, it's just like withdrawing from your initial investment. And then anything that's left over, this is again like another. So if you didn't end up pulling everything back, so I guess there's two scenarios. Let's say in one scenario, it sounds like this probably didn't happen, but let's say you pulled out 15 ETH. So you got everything back plus an additional 5. I would treat the first 10 as withdrawals and then the last 5 as income at that point. Because it's like now you've received back your initial investment. You're going to include those as income. But most people, I'm sure, didn't even receive back their initial investment. And so if that's the case, let's say you pulled back 3 ETH and then there were still 7 stuck in there, and then now the project is gone. There's again no specific guidance about this, but what I would recommend is treating this as a worthless investment loss. So that means that you had sent assets with the purpose of investing them. And that's obviously what you're trying to do here. It sounded like some sort of investment pool or something. But you had sent assets there. You didn't end up receiving, the investment failed. And so you would treat it as a trade for $0 at the time that it was determined that like the project was dead. And so you can deduct the cost of that 7 ETH, not the fair market value, just the cost. But, that is one option. Another is just treat it as lost, which you don't get any tax benefit from that. So I wouldn't recommend it. And then another one is just kind of like, well, those are kind of like the main two, I guess. Treat it as like lost or stolen, which is there's no tax benefit. It just removes it from your holdings. And then the other one is the worthless investment, the trade for 0. That one's like probably a little more aggressive, but I do it for my clients, especially if you can show there was like intent to invest those assets.
Yeah, that makes sense. So there's a few projects, not just Stable Fund, that there's like you buy an NFT and then now you can't like sell the NFT in a marketplace, so there's no actual like loss. So it doesn't mean anything. So that too is also a loss.
So, okay, so you have an NFT that you purchased and there's no market to sell it anymore?
Yeah, there's no liquidity, or sometimes tokens as well. I can't
Yeah,
think of
same thing.
anything right now, James, but
So
that was the
There's a
question.
lot of them.
Yeah, I
yeah,
know.
there was actually a memo that came out January 10th of this year. Someone was asking like a similar question. They're saying, in this case, you can read the memo. I can put it in like the chat or something if you want to share it. Let me just put a link in it here. You can share it with everyone. But if you want to reference this, this was a memo the IRS put out where someone was asking, like, hey, I had an asset that was worth a lot of money at the beginning of the year, and then it was less than $1 per unit at the end of the year. So it was like basically worth nothing. It was just $1. And they went and treated that as a loss, but the IRS didn't allow it because they said that dollar, even though it was only worth $1, you still could sell it and trade it. And so you can't take the loss until you sell it. So that's, one scenario in which this is a tradable token or NFT or something. But then they haven't said anything about what to do if there is no market for it. What do you do about it? So I would recommend doing the worthless investment loss as well. If it's an NFT, I know there's a program out or like a company out there called Unsellable NFTs. And you can send them your NFTs and they'll buy them from you for 1 cent. And then you can write that off as a loss. And you can show that there's an actual transfer. It went out of your wallet. So that would be like super clean way to do it. But I don't know of any program for that yet for like, all your other random tokens that you have. And so if that's the case, you can take that worthless investment loss, but just like don't ever touch it again, or maybe like send it to some burn address or something like that. Because if, let's say, you write it off and then later you like sell it, you'll obviously have to include that as income or gains at that time. But I'm assuming these ones you're writing off, like they actually are dead. Like we're never gonna see them again.
Yeah, totally.
Can I interrupt for 1 second? Couple
Yes.
audience things. I'm an American, so I always forget to do this. But this is US only, right? You do US taxes. I assume other countries will have kind of similar principles and guidelines, but you focus on US taxes only, correct?
Yeah. So I actually was born and raised in Canada, but I went to school in the US and that's where I got my master's and that's where I've worked and done all my tax law, training. And so I do everything based in US tax law. My dad actually is a partner at a Canadian firm though, so I do know a little bit about Canadian tax law, and we'll kind of refer people back and forth sometimes. So the general process, and I do have some clients in the UK and Ireland, some other places, so I can do like the full reconciliation and calculation for like people no matter where they are. But there are like a few different tax laws. Like in Canada, I don't know how much you want me to go into Canada tax law, but there's just different ways to treat things. Like in the US, you can only take $3,000 of losses per year and then they roll forward. In Canada, you can roll back your losses, which is really nice, and amend and get refunds. But they also do a different like cost basis method. They do an ACB method. But again, like what I would recommend is if you want to like work with me or if you have questions, like I can still do your full reconciliation and help you figure out your gains and losses, but then how it's reported on your tax return is like slightly different from the US. It's mostly the same, but there are just like a few different tax laws between the two. So,
Okay. Thank you. All right, Claire, sorry to interrupt. You can
No,
continue.
you're good. I don't really have any more for rug pulls. I can move on to the next one unless
yeah,
James,
let's
you want
move
to
on.
talk about if there's any questions in the audience, or you want me to just move to the next one. I mean,
Let's see.
you can't write off like shame or guilt or anything. Like in rug pulls.
Unfortunately, that would be nice.
Yeah, that's called like the stupid tax that we all have to pay when we get into crypto. Like at some point we've all like lost money along the way. This is just, the loss, I call it like the stupid tax that we've paid along the way to learn and hopefully avoid those in the future. But
There you go. It's tuition.
Yeah, absolutely. Hank would like to know, you kind of talked about this, is there a limit to how much you can tax loss harvest in a year?
so not how much you can harvest. So like let's say for example you have, and in case people don't know what tax loss harvesting is, that's like where you sell a lot of coins at the end of the year, or I guess at any point, but it's most common at the end of the year in order to take a big loss, and then you just rebuy them because you still want to hold them, but you want to take that loss because you can only take the loss if you sell, trade, or spend it. if you just hold those coins and they've gone down a ton of value, you can't, even if your portfolio's down, you can't deduct them unless you do this tax loss harvesting, which is sell, trade, or spend them before the end of the year. So as far as like whether there's a limit on it, let's say you had $100,000 of gains on December 1st, but then you were holding, $50,000 at a loss. You can sell that, and all of a sudden you've like whacked your gains in half, and that, you can totally do that. But let's say you had a $200,000 loss that you wanted to loss harvest. You can do the full loss harvesting, and that full $100,000 of gains will be offset, but then you're going to have an extra $100,000 of losses. If you have, let's say, gains in other investments like stock, mutual funds, gold, real estate, anything else that you like invest in, you can use those losses to offset those gains as well. So like I have some clients that like flip properties, and they can use their crypto losses to offset those gains, which is nice. But a lot of times the crypto market like kind of mirrors the stock market. And so if you have losses in the stock market, you might also have losses in crypto, but not always. So let's say you had no other gains, and so now you have this extra $100,000 of losses. You can only deduct $3,000, and then, well, you can only take $3,000 of net loss per year, and then the $97,000 would roll forward to next year. But the downside to loss harvesting is that it resets your cost basis and holding period, meaning that if you had held something for more than a year, you would have qualified for long-term capital gains treatment if it was up. In this case, it was down. But crypto's so volatile. In the next few months, it could swing the other way, and now all of a sudden you would be up. So it resets your cost basis and holding period. So if I were you, I would only sell up to the amount of your gains plus an additional 3,000. There's no real benefit in doing it, more than that.
Okay, super helpful. And Joe says, just so people know, there's a platform for worthless NFTs called Unsellable. You send them your NFT, they give you a receipt. So yeah, you can check that out. All right. Yeah, let's go ahead and continue on. We got a bunch of audience questions, so let's do these accounting general ones, and then we'll go through some audience questions.
Okay, these are kind of like, I don't know if it's rapid fire, but I'll just ask you real quick, Laura, from his community. One person's asking, when I buy a stable coin like USDC with US dollar, I guess the tax software that they're using, it shows that it's a gain even though they didn't profit from it. Is that normal? How do they avoid that?
So it sounds like they had an issue here where they didn't, they're missing the cost or like the original purchase of the USDC. So, well, in this case, I don't fully understand, because if you're buying USDC with a US dollar, that's not a taxable event. There's no gain there. I'm assuming that means when they eventually turned around and sold the USDC, they were seeing a gain. If that's the case, that just means your original purchase of the USDC wasn't flowing through. And so a lot of people, when they're using these crypto tax softwares, they have like these missing transactions, or they have missing cost basis or errors, whatever your software calls it. So that just means you're missing the initial purchase, or you're missing data, or you're missing transfers, something like that. So no, it's not normal to have gains on USDC unless it was this weekend. If you bought the dip, maybe you could have a gain on USDC. But normally, no.
Yeah.
This is a rare case, but when people submitted this, they didn't know that was going to happen this weekend.
Yeah. Can they write off the fees to go from fiat to crypto? So this person bought $1,000, but by the time they did all the fees, it's $950.
Yeah, you can deduct your purchase and sell fees against either. You can add them to your cost basis or reduce them from your proceeds. And it's the same thing when you buy or sell stocks.
Yeah. Okay, makes sense. This one, can one entry to be put on the tax from coin-based trades, or does each individual entry need to be made, which could be hundreds? I'm not sure what they're asking there.
I know what they mean. Yeah. Okay. So they're saying like if you have, so I think James was saying he had like 1,600 transactions. So it's like, do I have to list every single transaction, or can I just put like one line item and call it like Coinbase trades or something like that?
Oh.
So yeah, since crypto is a self-reported asset and there aren't like 1099s, granted there are some, there are some exchanges like BlockFi in the past has issued 1099Bs. But it's not very common. But if you don't have a 1099, the IRS isn't matching up your gains to anything on their end. And so it's just a self-reported asset. As long as the total gain or loss is accurate, it doesn't really matter how you list it out. So what I do for my clients is I choose like the top 3 to 5 biggest holdings. So maybe they have like Bitcoin, ETH, Cardano, whatever they're holding. And then I just lump everything else together, like their 50 other small tokens that they had tiny gains and losses on. And I just call that other cryptocurrency and put everything there. So you have to just split it up between short term and long term. But really, besides that, how you report it doesn't really matter.
Okay. Then the other two questions looks like it was already answered, but for as far as the last one for accounting general, can you explain the wash sale rule if it applies to crypto?
So it doesn't right now, but I'm guessing they asked this because last week Biden in his budget proposal put in the proposal that wash sales would start applying to crypto. So in case people don't know what wash sales are, that is when right now it applies to stocks and securities. So if you buy or if you sell a stock or security and it has gone down in value, so you had a loss, but then within 30 days you rebuy it back, you're not allowed to take the loss. Your cost basis will still adjust, so it'll be the same like long term, but in the short term, it's not going to make any difference. Or you can't take that loss. So with crypto right now, especially as we were talking about loss harvesting, you can sell everything and then the next day all at a loss. Like you could take a $200,000 loss and then the next day go re and buy everything. And your cost basis will now be lower, but you can still take that full loss. As of right now, the wash sale rule does not apply to crypto. You don't have to wait 30 days to buy back, which is good because crypto is so volatile. I'm glad I don't have to wait 30 days. But Biden is proposing that it will apply to crypto. So I don't know if it's going to go through. As of right now, the way the tax code is written, it says it only applies to stock and security, and crypto is considered property in the eyes of the IRS. And they've pushed back on things. I mean, in that IRS memo that I was referencing earlier, they said the reason you can't take these losses is because crypto is considered property, not securities. So that was like a big deciding factor in that case that they were writing out. So we'll see. I mean, they would have to either change the tax code or change the classification of crypto. But as of right now, you can still sell your losses and then buy back the next day, and it's no problem.
Yeah, that's good.
Yeah.
That's it for the accounting general. I have other questions, James, but you wanted just to do that one. Did you want to do your other question?
Yeah. Let's do some audience questions because otherwise we're going to fall way behind in those. And they're
Yeah,
here
totally.
live. So, I want to make sure I get their questions answered. Is there benefit tax wise to establishing an LLC?
Depends what you do. If you're a trader, meaning that you like buy, sell, trade, spend crypto, like everything is in the capital gain sphere, no benefit. It'll be taxed the exact same way, whether you have $5 million in capital gains or zero or whatever. Doesn't matter whether you have an LLC or not, it's not going to make a difference. The only place it makes a difference is if you have crypto income, and crypto income is usually derived from mining, nodes. If like my clients like pay me in cryptocurrency, so that's another source of income. Those are kind of like some of the main ones. I mean, there's also income like interest, staking, um, rewards, airdrops, forks, but none of those have expenses associated with it. So it's not really considered like self-employment income because they just come in. Like you don't have to do your main job isn't collecting crypto interest. You're just receiving that as like an investment income. But some people like are all in on mining. A lot of people are really involved in the nodes. And so it can potentially be considered self-employment income and you can deduct your expenses against it. But you don't have to have an LLC set up in order to take your expenses against your income. But an LLC could be beneficial if you make about $100,000 in net income from just that, business. So if you have more than $100,000 in mining income, I mean, shout out to you. That's awesome. um, Especially during right now. But if you do, then yes, having an LLC and then taxing it as an S corp, making the S corp election could help you. But it's not a very big group of people when it comes to crypto that having an LLC or an S corp is beneficial. But I just feel like people love throwing that out. They're like, "Oh, I have to pay all these taxes. If only I had an LLC." And it's like it won't make any difference.
Just make your taxes harder to do
Yeah.
in a lot of ways. Can I ask you on mining? So I have a lot of miners and I do a lot of staking. So is all that, if I mine a coin, how does that work tax wise? And what if I don't sell it? I just hold on to the coin. Is it still taxed as ordinary income? Or how do you handle kind of mining and staking income like that?
Yeah, so mining and staking are a little different, but with the mining stuff, we actually have had guidance from the IRS on this since 2014. And what they say that we're supposed to do is that you're supposed to treat the mining rewards as income as you receive them. So whenever you have, and they say you're supposed to include crypto as income when you have dominion and control over it so that you could sell, trade, spend, or otherwise dispose of it. So that's like their long spiel, basically meaning like once it's free and clear, like if it's not like locked into some like contract where you have to like it's vesting or you have to wait a certain amount of time. Like I know there's a lot of like hex contracts like that, but um once if this mining rewards are coming straight into your wallet and you could like sell them tomorrow, you or right now, then yes, you're supposed to include those as income as you receive them. So whatever the value, let's say you're mining Bitcoin, whatever the value is of Bitcoin at on today, and let's say you receive 0.001 or 0.001, then you'll just include that as income. And then that becomes your cost basis in that coin. So if you sell, trade, or spend it later, you'll recognize a gain or loss depending on whether it's gone up or down in value from when you originally received it. So that's how the income side works. But then along with mining, there's a lot of expenses. Like you have to buy the miners, you have the electricity, or if you do like cloud mining, you have like all the fees. Like there's lots of different fees regardless which way you mine. And so all of that can be deducted against your income. The only thing you wouldn't be able to do is if you had losses for more than 3 years in a row. The IRS says if you have losses for 3 out of the last 5 years, after that, it's considered a hobby, not income. So that would be the one thing to look out for. When it comes to staking, it's similar in the way you treat income or the mining income is you're supposed to include those as income as you receive them. So whatever the value is of them as you receive them, those will be income. But there's not really expenses associated with staking in most cases, and so those are just considered other investment income instead of, like, self-employment income, and that would be the way you would want to classify them because, self-employment income is subject to self-employment taxes, and there which is, like, an additional 7%. So you don't wanna have to pay an additional 7% on your staking income, but it makes sense on your mining income to do that because you're able to offset it with the expenses.
Okay. Nope.
Does
Super
that make
helpful.
sense?
I love how the IRS like low key told you like, oh, figure it out. You're not making money. It's a hobby now.
Yeah, it's a
Yeah,
hobby now.
they're
Yeah.
like, "This is a hobby, like, your little mining business, like, this is
Yeah,
clearly not a
sorry.
business because 'cause you're making no money."
Yeah.
We're
That
just
this
doing this
mattered
for fun at this point.
This mattered more to me, yeah, when the markets were higher, but now the cost of the miners will offset any gains I had, so that's
Right,
good.
but, I mean, I do feel like we see a lot of, like, business losses in crypto because people are mining with the hope that it's gonna go up in value, so, like, yeah, I know I'm losing money right now, but it's gonna pay off in the end, so, um, y it's not uncommon, but you just can't take it for more than 3 years, which is why I wanted to mention, yeah.
Okay, very good. What crypto tax software do you recommend? So I know there's a whole bunch of them out there. Is there one that you think is better than all the others?
Yes, and I don't work for these people, I don't get paid or anything by them, but I've worked in almost all the crypto tax softwares, and the one that I use is called cointracking.info. There's one called Cointracker and one called Cointracking, so don't get them mixed up, I use the one called Cointracking. Um, I use it for all of my clients. It's not perfect, like none of them are, but compared to all the other ones, it is the best in my opinion, but it can be overwhelming because yeah, here it is. It does have a lot of features. And so I love it as an accountant. Like when I'm working through my clients' accounts, it's really awesome for helping me figure out like where the issues are in coin tracking, where's the problem with the data. I can like audit it really well in here, but for sometimes like a first time user, it can be overwhelming. So if you want to check it out, there's two things if you don't mind me plugging here. You can go to cryptotaxgirl.com/cointracking and it'll give you 10% off if you end up needing a paid account. Or if you get in here and you realize it is maybe a little too overwhelming for you, or you just don't want to like waste time using like with the learning curve here, um, I'm in it all day, every day, so I understand all the features. And I have a course. If you go to cryptotaxgirl.com/learn, it walks you through like my entire client process from the very beginning to the end, teaching you how to like put all your data into coin tracking, reconcile it, pull your tax reports, and then file your own tax return. Yeah, here it is. And if you actually use the code, it was Pelton, right? Pelton.
Yep, Pelton.
You'll
Yep.
get $150 off. So just for everyone who listens to this.
Yep, and I'll put this link. So this is with the code already on there, I believe. So yeah, I'll put that link. So thank you. All right, yeah, we got tons of questions flying. And this, man, we'll probably have to cut off at about an hour. So, guys, if you don't get your questions answered, well, we'll talk about that here in a little bit. Let's just get through as many as we can.
Okay, I'll try and go faster.
No, you're good. You're good. This is super helpful. Sometimes you answer 5 other ones in the question, so that's
right. I'm like, I know this is coming, so I'll just continue.
yeah. Does holding crypto on a foreign exchange constitute a foreign bank account and subject to that reporting?
Okay, yeah. So I think they're referencing here FBAR reporting, which yeah, normally if you hold things on a foreign bank, or if you hold currency on a foreign bank account for more and it's more than $10,000 at the end of the year, you have to report this on a FBAR form. The IRS has not said anything, or the Treasury has not said anything specifically about whether crypto needs to be reported on this form. But in November 2019, there were like a few statements made, like unofficial statements at like accounting conferences and stuff by representatives from the IRS and Treasury that said it didn't need to be reported. So I've just kind of gone with that. Again, it's not official, but I don't report any crypto stuff held on a foreign exchange as, as reportable on the FBAR, just because the IRS hasn't said whether a foreign exchange is considered a foreign financial institution. So no, I wouldn't. But you can, like, doing so, it's just informational. So if you like want to be conservative or you're nervous, just go ahead and report it because you're not paying taxes on it. There's no additional fees. It's just informational. So either way.
Okay, very good. I mean, you kind of talked about this, but I don't know what Form 4797 is. But would you recommend Form 4797 to report losses on coins that went to zero?
Let me double check what 4797 is.
Yeah, I'm gonna look it up. I'm not familiar with that one. I'm not familiar
Sale
with
of business property. Okay, but coins. Well, it would depend if this is like in a business. So Form 4797. Oh yeah, this is like where you put depreciable property. No, I wouldn't recommend it on this form. Maybe you're talking about Form 8949. If so, I would put it on Form 8949, not on the business property one. So no.
Okay, there you go. Is it possible to pay taxes in crypto?
I think there is like some states, like I think Arizona allows you to pay taxes in crypto, but like doing so is also a taxable event. And so you're going to have a gain or loss on that. But like maybe you have a stable coin or something you want to pay crypto in, but also you can just convert that to USD and pay it in USD. So I think there are some states that are like, trying to be hip and cool and like allow this, but it's not really a big benefit to you. So I wouldn't, but you can. Maybe if you live in Arizona, I think.
There you go. Is it okay if the estimates are approximate if I have a large number of transactions? I've wondered this too. Is how exact do you have to be, or do you just, like you said, you kind of do the best you can, or what's the advice on that?
Yeah, I mean, like, you're not supposed to, like, estimate on the tax return, but, like, it would be similar to, like, if you were filing, like, your business income and expenses. Like, if you're putting, how many business miles did you drive, or how many business meals did you have, or, what did you pay, and how much of your cell phone bill can go to your business? Like, I don't know I'm not having a log knowing the exact number of hours I spend doing work stuff versus personal stuff on my phone. I'm just like, it's probably about, 30% or something like that. So it's in some cases on like IRS forms, you put in an estimate, especially for like, so when I'm doing client work, if there's like a number that, it's only a few dollars, I'm like, we'll just treat this as this, or we're just gonna do this. If it's like big numbers, I mean, it's not as good to estimate. You want to do the best that you can, but also like I understand that it is difficult to do this. And so if you are going to make an estimate, I would just like document why you made that estimate. So that if you're ever audited, you have like some sort of reasoning, but also the IRS probably isn't going to accept like, I just did this because that's what I, felt. It's like, okay, I think I put like $20,000 into crypto. It's like, well, just open your bank statements and see how much was transferred in, or like, so anything you can do to actually get the data is the best. But sometimes there's like lost exchanges, or you lose wallet keys, or you aren't able to access the data, then you have to kind of put in an estimate. But if you have the data, try and use the data.
Yeah, there you go. Let's see. Since programs don't or haven't sent out a statement for capital gains, do you have to figure out everything on your own? That's question 1. We'll do that one first.
Yeah. So crypto is a self-reported asset. You do have to figure out everything on your own. It's not like if you bought a stock and then Fidelity will be like, here you go, here's the exact gain or loss. You do have to figure out everything on your own. It's difficult.
Yes, it is. And then how are private loans sent and made through crypto handled by the IRS?
So loans aren't taxable as long as they're paid back. So if I loaned you some Bitcoin and then maybe you made some interest payments and then you paid it back to me, that's not taxable. Like, the interest payments would be, but like the actual loan and the amount loaned isn't taxable. It's only reportable if you get liquidated and then you have to report some sort of like loss on that loan. But it's not something you have to report to the IRS. I don't have to say like, oh, right now 3 of my Bitcoin are with James. Like, he's loaning that. You don't have to report any of that. So it's only handled, I guess, or reported. The IRS would only know about it if you got liquidated or if you had interest paid or received.
Okay, very good. And then does what you talked before about losses, is that the same as you'd handle a loss from FTX?
Kind of. Not really. I mean, sort of. Again, it's like kind of a gray area here. With that rug pull one, because it's like finalized, it's done. You're not gonna see like that. The person who started this, what was it called again? Stable fund. It seems like they're not responsive. They're done. This project, you're never gonna see your money again. With FTX, it's still in limbo. I mean, I personally don't believe you're gonna see your money again, or on BlockFi, or any of these other ones. But just because, history has shown that you're not going to. But that's not like enough basis for the IRS, I don't think, to take a loss yet, because in their eyes, it's in bankruptcy proceedings. They're trying to get your money back, but it'll probably get eaten up by lawyer fees. So we'll see. But especially if this is related to 2022, I mean, this is when these losses happened. Most of my clients already had losses that year from like their normal trading anyways. And when we talked about that $3,000 loss earlier, um, let's say you had $10,000 on FTX that you lost. I wouldn't recommend taking that $10,000 loss now if you already have the $3,000 of loss anyways, because it's a pretty, aggressive position since it's still in those bankruptcy proceedings. So I would wait. And then, but as for the waiting, you might be able to take it as a worthless investment loss, like I described earlier. But again, there's just no guidance from the IRS yet on what to do here. I'm hoping they'll issue something since it impacted so many people, but I mean, they're busy right now with SVB. They're busy with everything. Like, I don't think that like this is their number one priority. So we'll see. But if you're in this case and maybe you did have gains and you're wanting to take this loss, I would maybe recommend filing an extension, which will give you until October 15th to file your tax return. And maybe by then they'll like give us some more info. Maybe not, but at least then we'll be 10 months removed from the situation instead of only 2 months, from the situation. So then maybe taking the loss then would make more sense. But something
Okay.
I would probably chat with like your CPA about, or me.
Gotcha. And then, so we heard Biden's planning on taxing crypto miners. That's something he's been talking about. I don't know if you have any thoughts on that or if that's actually going to come through. He talked about a 30% additional tax
Yeah.
on mining. I don't know if you have thoughts.
I see all these propositions. I just wait till they go through to kind of like worry about them. I don't know if they'll actually get pushed through, but if they do, I guess we'll deal with it when it happens. But I'm not a lobbyist, so I'm
Yeah.
not too concerned about it, the tentative stuff right now.
Yeah. No, I think that's smart. In Cointracking, what methods do you recommend to use for tax reports? Opti, Zero, FIFA, etc.
Or FIFO, not FIFA.
FIFO, yeah, sorry.
Okay.
Soccer fan here.
I'm the accountant, not you. It's fine. Coin tracking. So I used to always use FIFO, just first in, first out. But the IRS says you can use specific identification method. And this means that you can choose like to specifically identify a different way of doing it. So instead of doing first in, first out, you can do last in, first out. You can do highest in, first out. You can do lowest in, first out, whatever. And then Opti and Zero are the ones that I mostly use for my clients now. But just note that in coin tracking, if you've used FIFO in the past, when you go to the final tax report section, again, I cover this in my course if you want to like see me actually do it. But when you go to the tax report section, choose multi to indicate that in the past you have used FIFO and now you're switching to Opti or Zero. You can't just pull Opti and Zero and have that apply to all years if you have reported FIFO in the past, or else you'll have cost basis issues and the year-end balances will be off and you'll be like artificially stepping up or down your bases. So just something to keep in mind. Make sure you use multi and then change per year. This is very specific to Cointracking, but Hank obviously like knows what's going on.
Okay. Yep. No, that makes sense. So we got a couple last questions here, and then we'll go back to Claire to your sheet. If I buy gift cards using crypto, is that taxable?
Yeah, so there's three things that are considered taxable events. So selling to US dollars or any other fiat, trading, swapping one coin for another, and then spending on a good or service. So in this case, you would be buying gift cards. And so that is taxable. So if you purchased it with like Bitcoin or ETH or any other coin that is volatile, you will have some sort of gain or loss depending on when you originally acquired that, let's say ETH, and then now you're spending it. But like, let's say you're buying these gift cards with a stable coin, again, assuming it wasn't over this last weekend, you won't have, it's like technically taxable, like it is a taxable event. But if you buy $100 of USDC, assuming it's fine, and then you go and buy the gift card, $100 gift card, there's not going to be a gain or loss on the USDC. So,
Okay.
like it's reportable, but there's no gain or loss.
Okay. And then where's the best place to live for crypto taxes? So are there any, so I'll say in the US, are there any states that it's better to live in? And then also, do you have thoughts on where in the world would be the best place to live if you have a lot of crypto gains?
So live is different. I mean, so we're all American. Well, I'm technically Canadian, but I have a green card, so I'm subject to American tax. If you are an American, it doesn't, like Dubai, for example, has no tax. Like that's amazing. I want to live in Dubai. But I would have to denounce my American citizenship, residency, and then, become a Dubai resident, which that's, complicated in its own sense. So I can't just live there. Like I could never step foot in the US again for the rest of my life and live in Dubai for the rest of my life, but I still have to pay US taxes every single year because I'm a citizen or resident. So that, kind of sucks if you're US. Not all countries are like that, but American tax law is written like that. So the best place to live in the US, if you don't mind living in Puerto Rico, that could be a good option. Puerto Rico doesn't have capital gains taxes, but there's a lot of things you have to do to qualify for it. And any crypto that you held prior to moving there is still subject to tax. It's just only new crypto that you buy once you move there. But I have had some clients do it. They're living the beach life now. If you are wanting to stay in the mainland USA, any state that doesn't have state tax is probably the best because everyone else is subject to the same federal tax. Whatever the federal tax rate is, everyone is subject to that except for the Puerto Ricans. But like you could go to Florida, they don't have any state tax. Texas, there's like 5 states that you can avoid state tax on. So that would maybe be a good option. But California, New York, you're going to pay more, but there's pros and cons to living in these places. So
Yeah, absolutely. Quarter mile, it seems like most of your questions are about sketchy things. But is it, I mean, there's a place for that, I suppose. But he's asking, let's see, he's asking if you can loan someone and the repayment is for longer than that other person's lifespan. Is that a way to get around paying taxes?
This guy's very creative. If or guy or girl, whatever, if loans aren't taxable, as an example, could person A loan person B 1 Bitcoin for $20,000 USD collateral? The loan repayment term is longer than the person's lifespan. Is this still not taxable event? In this case, I mean, yeah, it's not taxable, I guess, but you would have to like pay interest over the lifespan, so that's probably not going to be beneficial. If you're trying to just give A to B Bitcoin, just gift it to them. So you can gift $17,000 per person per year, tax free. And if they're married or you're married, then that doubles. So 17 then goes to 34, which again you can double that again if you're both married, and so that just sounds easier than these weird loan agreements.
Yes, absolutely. What are your thoughts on, there's always different people have different ways to get around taxes and, oh, I could do this and it's, then I won't have to pay taxes. And there's always, these loopholes and things like that. What is your take? Is it worth looking for those, or are you better off just kind of doing it the way the IRS says, or what's kind of your thoughts on that?
I mean, if there are any that are like legit, like I would be promoting them and screaming them from the heavens. So like there are ways you can reduce your taxes, like, but unfortunate with like these capital gains and losses that you can't just be like, oh, like people are like, oh, I'll just buy like a car and put it as a business asset. But it's like, but these are capital gains. Like this isn't business income. So like that doesn't work. Or like people are trying to always be creative or like, I'll just set up an LLC. But it's like, but that doesn't gonna affect your gains or losses. So there really aren't like unfortunately many like loopholes when it comes to this crypto stuff, because it's all capital gains and that's like kind of straightforward as far as like the actual taxation. Getting the number is not as straightforward, but um I would just try and like implement some tax strategies, like trying to maximize your long-term capital gains, harvesting your losses, stuff like that. But really, other than that, there's not much else you can do.
Okay. What if I
If you know of
gift
one, let me know.
what if I gift my miners to my kids and then they lower income or something like that?
So there's like a thing called a kiddie tax because obviously they don't want you to like, gift to kids and it's a lower tax bracket. So it wouldn't work if it's your kids, but you could gift it to your brother or like, something like that. But then now they own it. So depends
Yeah.
if you want them to own your miners or not.
Gotcha. All right. Well, and a welcome Quidditch to the community. Thanks for joining. Appreciate you. And Kevin as well. Good to see you guys. Thank you so much. Last question, then we'll get back to Claire's here. Alpha question. Where are your clients making the most money in crypto? Are you allowed to share that?
I mean, I did have some that did really well in NFTs, like not last year, the year before, or whatever. Some like Bored Apes were doing really well. I did have like a lot of like DeFi liquidity stuff when those like liquidity pools were offering a lot like really high returns, but then like so many of those like like Luna, for example, like that one got destroyed even though it was like providing a ton of liquidity before that. Trading, again, like the nodes, like I had a lot of people make a lot of money off of like strong nodes at the beginning, like they were making tons of rewards, but then that project died as well. So it's like usually if you're like the first to something, maybe you're doing really well, but if you're finding out about it like after everyone knows, like good luck. But except for like buying and selling like cryptocurrency, like you can jump in anytime and the market's going to change a ton. So it's not too late to like buy Bitcoin and get involved, but if you're doing one of these weird or like obscure like things, it's probably just not best to be last.
I would agree. That's good advice there. All right, Claire, maybe you want to go back to the questions
Sure.
from the sheet and just if you see ones that haven't been answered or talked about.
Yeah. We kind of talked about NFTs, but more specifically, they want to know how they treat it. Like, can they claim a loss until the ROI?
Like did they purchase the NFT or create
Yes.
the NFT?
Purchase the NFT. Now it's a sunk cost. Can they write that
You
off?
can't take the loss unless you like sell it. So you
That's what
can,
I thought.
but if you're just like holding it and it's gone down in value, then no.
Okay.
You have to like realize that loss. So again, you can use that like unsellable NFTs if you want to get rid of it. If you want to still hold it, but you're not willing to like sell it and rebuy it, then no.
Right. This one we kind of talked about an offshore bank, or you were talking about offshore exchange, but there's a project out there that some people in the community are in, and it's an offshore bank. And if they have crypto sitting in that wallet, do they have to report that? If they haven't off-ramped it yet, it's just crypto sitting in an offshore account. Does that make sense?
Offshore bank or offshore like exchange?
It's an
or
actual
what?
bank.
And they hold a wallet for you or whatever.
They hold the wallet for you, but it's sitting in crypto, but it hasn't come into US soil.
Yeah, like to be safe, I probably would. Again, this is just like an FBAR reporting. It's super easy. Just like Google like FBAR reporting, and then you just put in your name and info. It's really easy. So if you are like subject to those limitations that would require, so if it's just like a few dollars or $100, you don't have to. It's only if you're over like the $10,000 limit. So if you do have that, then probably be safe. But like also probably the IRS isn't gonna find out about it. But
Yeah.
it's like better to be safe than sorry because like the penalties
Sure.
can be high. So sure, go ahead and do it.
This is more like a lawyer question, but I'm going to ask it anyways. They're
Okay, I'll
asking
see.
that some projects they block US investors, so people are
Mhm.
using a VPN. Are you aware of any potential ramifications?
Yeah, this is from like a law perspective, maybe or like whatever, but from a tax perspective, no. Like even the IRS says you're supposed to report illegal income, which I don't know, like people that have illegal income, like if they really care about the tax code, but like you are supposed to include all income regardless of where you get it from. So if you like trade on like BlockFi, not like the non-US BlockFi not BlockFi, sorry, Binance, or any of these other foreign exchanges, you should still report your gains and losses, but you don't have to like report on the tax return like this happened on Binance. Like you just put that it was Bitcoin or whatever it was, or even just other cryptocurrency and what the gain or loss was. But some people will try and be like, oh, because it's foreign, I'm just not going to include this. But that also is an issue if you transfer in and out of that at all between any of your other wallets and exchanges. Because let's say you buy something there and then you sell it to Coinbase and, or send it to Coinbase and sell it there. You have to have that original purchase in, or else you're going to get that like missing cost basis and, errors in your final report. So don't try and like piecemeal it, like just put it all in, but know that you don't have to like report this to the IRS. Like I was trading here, like you don't have to tell them that. So.
Okay.
This last question, James, that I have on the sheet is mainly about her services and how much she charges. So I don't know if you want to wait that till the end and you want to do your stuff.
Yeah. Let's do. So I want to do a giveaway. We're gonna do a giveaway, and actually, this question: if I won a contest or a giveaway and received stable coins, is that taxable?
It is, yeah. Like if you were on, my dad was on The Price is Right like a few years ago randomly and won like something, and you have to include whatever, like I think you got like a leaf blower, but you like have to include that as income on your tax return. Same if you won like the lottery, a game show, anything, winning a contest, a gift, or not a gift, but like a tip or something like that. All of that is taxable.
Do you remember when Oprah did like, you get a car, you get a car? They're like, a ton of those people were really upset because they had to pay taxes.
Okay, but also they had like something worth 70,000. It's like,
I
okay,
know,
you got like a
that's the thing.
$50,000 car. Yeah, you have to
Yeah.
pay taxes. Just go and sell the car if you don't want it, and you
Yeah,
can cover your
right?
tax bill.
All right. No, thank you. Super, super helpful. And actually,
I'll
yeah,
take the
Crypto
car
MK
next
says
time.
this helped answer a lot of questions I had. I recommend Laura be asked back each year for tax updates. So yeah, thank you so much
Thanks.
for
Glad it was
coming on.
helpful.
So okay, well, yeah, let's talk about your services, and then we'll end giveaway very last thing.
Okay,
So
sure.
if people are wanting, if they have more questions, or they want to fully use you, or they just want the course, what all do you kind of offer? What are the different ways people can get access to you?
Yeah. So the first thing I would do is just go to my website, cryptotaxgirl.com, and that has like links to all the different things we can do. So like I have consultations that you can set up. So if you had some extra questions here, or like they were like so specific to your certain situation, they weren't really good for like a broad audience. I would be happy to chat through you with that. And you can set up the consultation there. And that's just only $150 for 20 minutes. That's like the cheapest way to get started. There's the course, which we've already talked about. So cryptotaxgirl.com/learn. And then the code is Pelton, which will give you $150 off. So this is another like great way to start. Even if you do want me to like do your crypto taxes, could also be a great way to start to help like reduce my fees. So what I have all of these, different options, but what I spend the majority of my time doing is calculating crypto gain and loss reports and filing tax returns. And so we like to offer that like hand-holding experience. Well, you give us all your data and we will do everything for you. We really prioritize accuracy. We've been in this for so long, like 5 years. And my team is like small because I don't want to keep growing and like compromise quality. Like we really produce high quality crypto gain and loss reports. We help with tax planning. Again, we can file your tax return, and all of that is at $500 an hour. We are booked out for the tax season because the tax deadline is like a month away. So if you do for some reason need help before then, we do offer priority rates of $750 an hour, or you can file an extension, which will give you until October, and then I can take you on after the deadline. So yeah, I kind of offer like as much or as little service as you want. Like I don't have set packages. Like you could take the course and do the majority of it, and then let's say you just want me to still review it at the end. If for some reason you still have questions, that can always help like reduce my fees as well if you do the course first. But I'm happy to. Some people don't want to learn how to do it their own. They're like, that's why I got you. I don't want to learn how to do this on my own. So if you don't want to learn, I'm totally happy to do the whole thing for you as well. And that's what we spend the majority of our time doing. So those are our main services. We also could do like valuations, tax plannings, all these other things, but they're just not as common.
Okay, very cool. All right, well, we'll go ahead and end with a giveaway here. And we've been talking to Claire about how much to give away. I think, $250? How do you feel about that? Does that sound good? So we're
Yeah,
going to give
sure.
away $250. This is from Laura. No, I'm just kidding. It's from me and Claire. Surprise guest. Thank you for coming on. So we're going to give away $250 to one person. You have to be watching live. Inevitably, people watch the recording and they start commenting, oh, I want to win. I want to win. This is live. So if you're watching this as a replay, you cannot win. I'm so sorry. You'll have to make sure you come to the next live. So we're going to do $250. Let's do comment right now, hashtag taxes. Okay, that's not very creative, but let's go ahead and do that. So hashtag taxes. I'll give you about 30 seconds. Then we'll use the fancy StreamYard giveaway tool and hashtag taxes. We'll give away 250 USDT. Okay, just to be safe. You know, we're not totally sure about USDC right now. We'll do USDT 250 to one person. If you comment hashtag taxes, I'll give you another like 15 seconds or so. This is taxable. This 250 you're going to receive. Do I get a tax write-off for giving it away, or it's just a gift, right?
You could use it as like marketing though.
There you go.
So this is marketing. I would put it as an expense if I were you.
Okay, I'm gonna do that. So
and since it's not a gift, you don't have to like provide the receiver with your cost basis and your holding period info. I mean, since it's USDT, it doesn't matter. But yeah, I would put it as marketing expense, and that means the winner has to include this as income.
Okay. So keep that in mind. Maybe you don't want to make your taxes more complicated. Then don't comment hashtag taxes.
You're like one of those Oprah people who's like mad that you get free things.
Yeah, right. Exactly. So okay, we'll go ahead and do this now. 250 USDT. We have 21 people in commenting multiple times. Green Llama does not help you. It's one per person. We got 22 entries. Let's go ahead and do this. This is kind of exciting. So, Claire, yeah, I'm so happy you found this giveaway.
Cool. I don't know how to do a drum roll, but I'm pretending. Yay!
Winner, Good Times and Gold. Congratulations, Good Times and Gold. Get in touch with. Let's see. How do I have you get in touch with
Pocket Aces?
Okay, yeah, get in touch with Pocket Aces. Probably on Discord would probably be the easiest way, and we'll get you your 250 USDT. So congratulations, and thanks everyone who's watching. Please hit the like button on your way out. Appreciate you guys. Thank you for all the amazing questions. Super great questions. Again, you guys have way better questions than I would if I just put them together myself. So thank you guys. And Claire, thank you for putting this together.
Yeah.
And Laura, thank you so much for joining us, for sharing your expertise. This is something that we really need. So I appreciate you very much for coming on.
Thank you. Yeah, glad to have be on the show. And just remember, April 18th is tax day. So get your stuff done before then.
Okay, follow her on Twitter. She has some good stuff on Twitter.
Yes. Yeah. Yep. Follow on Twitter. I'll leave a link to that as well. All this will be in the description too, if you don't catch it right here. But yeah, thank you, everybody. Appreciate all of you and hope everybody has a great rest of the day.